Hello and welcome to Bloke in a Pub. I didn't have time to make it into the office today, so this time we're doing the broadcast from the Mothership. Scanners are detecting a degree of hysteria and anxiety on your planet about a worldwide stock market wobble. Started in the Dow Jones at the beginning of this week and then has gone into other world markets, and there's been significant volatility. And it's important to see what's actually at the core of this. And what it really comes down to is the economy's been doing really well, and we're now approaching full employment. Now, what that means is that if everyone's employed and there's no one to replace you in your job, you'd be mad not to ask for a pay rise. As a result, wages go up, people have more disposable income, they spend more, they drive prices up, and you end up with inflation. Now, when that happens, the central banks, they then have to put up interest rates, and that's to hit us in the back pocket with the cost of debt to restrain inflation. So the worry is that we're going into an inflationary environment and the interest rates will be going up a little bit faster than we all thought. What that will mean is that companies also who borrow will have less money to invest. And that's important because when you get to full employment, you haven't got any more bodies to throw at a problem. So it's very hard to put production up. So what you need to do is invest, usually in new innovative technologies, to increase the productivity of each individual you've employed. And if you can't afford the cost of the borrowing to fund that, then you can't do it. Your profits go down and your value to investors go down. Now, what nobody is talking about, however, is that the leader of the free world, a chap in your client that I'm convinced might actually be an alien, called Donald Trump, actually pushed through a huge swathe of tax cuts at the end of last year. In particular, he reduced something called corporation tax. That's the amount of tax that companies pay on their profit. What that means is that they've got more money to invest. And actually, the intention to invest in US companies at the moment is higher than it's been for the last 10 years. So what that means is that companies might continue to drive forward productivity with greater investment, even though we've reached this point where we might also see inflation. So we're at kind of a bit of a crossroads on your planet at the moment, where we could be going into an inflationary environment, which could lead to a bit of a downturn, or we could go into a capital investment environment where we might be pushing forward production and stay in what you call a bull market. So what should you as investors do? Well, if it's an inflation environment, the very worst thing you could do is move your money into cash, because as prices inflate, your money and its buying power will be left behind. If you're going to stay invested, which kind of makes sense, you should probably diversify your investments a little bit more, maybe have some strategies in there that capture a downside. But you should also be aware that if we are approaching a peak in a business cycle, this is where you usually get the meatiest returns. Typically, in the year leading up to the peak of a business cycle, the average return from stock markets like the S&P 500 has been around 27%, whereas the dip in the following year has been 11%. So there's greater value in staying invested anyway. Beyond all of that, in the long term, this is 5 years plus, nothing outperforms stocks and shares. And stocks and shares are the only asset that has consistently beaten price inflation and increased the buying power of your money. So dips like this tend to be temporary, whereas in the medium to long term, there's value in staying invested. And this probably all tends to imply that at the moment, we should stay invested and not do anything rash. And again, evidence suggests that doing something rash is the best way to lose yourself money. So anyway, next broadcast will actually be from the pub. We're going to be beaming down for that. And we will look forward to seeing you next time. And in the meantime, live long and prosper.